Hi traders, you are welcome back to the Forex Geek channel. If you are looking to simplify your trading and take your strategy to the next level, then you are in the right place. In this video, we are going to be breaking down how to combine three of the most powerful indicators, which are the EMA, RSI, and ADX, right, into one complete strategy. Okay. Now, this combination will help you filter out noise, identify solid entry and exit points, and make smarter decisions in the market. Before we dive in, if you find this video helpful, make sure to hit that like button and subscribe to the channel so you don't miss any of our future tips and trading strategies. Now, let us get into it. First off, why combine indicators at all? Well, each of these indicators provides different types of information. The EMA, right? The EMA helps us to spot the overall trend. The RSI shows us potential overbought and oversold conditions, while the ADX measures the strength of the trend. So by combining all three, we get a well-rounded view of the market, reducing the chances of getting trapped by false signals. Individually, these indicators are useful, but when used together, they give you a much clearer picture of what is going on in the market. Let us start with the EMA, or the exponential moving average. Now, the EMA is great for identifying trends because it gives more weight to recent price action, which makes it much more responsive than a simple moving average. This makes it an ideal tool for traders who want to catch quick price movements and trends. Now, for this strategy, we will typically use a shorter EMA, such as you can actually decide to use the 9 EMA or the 21 EMA, alright? But let us use the 21 EMA for the purpose of this video, alright? So, because the 9 period EMA is actually excellent for short-term trends, but the 21 period is perfect for spotting medium-term trends. So, here's how we use it. When the price is above the EMA, alright, when the price is above the EMA, it signals a bullish trend. Then when the price is below the EMA, it signals a bearish trend. The key to using the EMA is to always align your trades with the trend. Alright, if the price is above the EMA, you should be looking for buying opportunities. But if the price is below the EMA, you should be looking for selling opportunities. Simple, right? Next up, we've got the RSI, or the Relative Strength Index. Now, the RSI helps us to measure whether an asset is overbought or oversold, which tells us if a price move is likely to reverse soon. So here's how we can use the RSI in our strategy. If the RSI is above 70, it means that the asset is overbought, and we could see a price pullback or reversal. On the other hand, if RSI is below 30, it means that the asset is oversold and it might be due for a rebound or a reversal. So we are looking for convergence between the RSI and price action. For example, the RSI is showing overbought conditions, but the price is still moving up. You should be cautious. Alright? You should be cautious. Like you can see what happened here. Overbought, but the price was still going up. Okay? Should be cautious. This could be a sign of a potential reversal. The overbought territory could be a sign of the RSI being in overbought territory is a sign of potential reversal, but it doesn't mean that a reversal will happen immediately. So you should always be making sure that you get a confirmation first from price action before you go ahead to enter the trade. Alright? Now let's talk about the ADX, or the Average Directional Index. Now the ADX measures the strength of a trend. It doesn't tell us direction, but it lets us know how strong the current trend is. All right. This is crucial because a strong trend is much more likely to continue than a weak one. So the ADX is usually displayed as a line, right? It's usually displayed as a line, and here's how we use it. If the ADX is above, let's just add the price level. Okay, let's add the price level that we're going to be using. So you can just add the 25 and the 20 price levels. Okay. So if the ADX is above the 25, it indicates a strong trend, whether it is bullish or bearish. All right. But if the ADX is below 20, it indicates a weak or no trend, which is a time to avoid entering trades. Now, in our strategy, we want to make sure the trend is strong enough to support our trade, and that is where the ADX comes in. For example, if the ADX is above 25 and the EMA is aligned with the trend, it's a good signal to take a position. Like you can see what happened here. The ADX is above 25. Okay, let's use this. ADX is above 25 here. You can see that the price is above. The price is above moving average, so it will have a good opportunity to enter a buy trade. So now that we've covered each indicator individually, let's go about how to combine them for the full strategy. Okay, the goal here is to use each indicator to confirm the signals from the others. The first step is to look at EMA. First, determining overall trend. Okay, is the price above or below the EMA? If it's above, look for buying opportunities. If it's below, just look for selling opportunities. Then the second step is to check the RSI. Okay, make sure that RSI confirms the trend. All right. If the RSI, if the price is trending upward but the RSI is above 70, be cautious of overbought conditions. If the price is trending down, right, and RSI is below 30, it should be, you might want to wait for a reversal, right? Then the third step is to analyze the ADX. The ADX will tell you how strong the trend is. If the ADX is above 25, then the trend is strong. All right, it doesn't matter whether it's a buy trend or a sell trend, okay? Because the ADX does not tell us direction. What it tells us is the strength of the trend. So in this scenario, we can see that the trend was a sell trend, right? Price was below moving average. RSI was trending downwards above 30. So this was a good selling opportunity. And ADX confirmed that this was a strong sell. You can see ADX was above 25. Now let's go for a buy opportunity. You can see this is another good example. Price was above moving average. RSI confirmed it was below 70 but trending upwards. And the ADX also confirmed the strength of the trend as it was above 25. So this was a good buying opportunity as well. All right. So here are a few more tips to help you execute this strategy successfully. Always wait for confirmation. Do not rush into trades. Wait for all three indicators to align before pulling the trigger. All right. Also, use proper risk management. Always set a stop loss to protect your capital and ensure ensure that you consider good risk to reward ratio. Okay. And finally, stay patient. The EMA, RSI, and ADX combination works best when you follow the trend and wait for the right signals. Do not chase the market. Okay, do not chase the market. Let the setup come to you. So to wrap things up, combining the EMA, the RSI, and ADX indicators creates a powerful strategy that simplifies your trading while improving your accuracy. The EMA helps you follow the trend. The RSI keeps you from chasing overbought, oversold markets, and ADX confirms the strength of the trend. So by using all three together, you can make more informed and confident decisions. If you found this strategy useful, don't forget to like the video and subscribe to the channel for more trading tips and strategies. Thank you for watching, and as always, trade smart and stay patient. I'll see you in the next video.